Hello, welcome back. I hope you guys enjoyed that little lunch break and networking opportunity. We look forward to having another jam-packed afternoon of great content. My name is Nicholas Dawes, and on behalf of InvestNet as well as WealthStack, we hope you enjoy our content here today. We will have an active panel here today, so we will have Q&A. So we will put up on the slide here how to go through and add your questions. So what you're able to do is using the app, you can submit your questions. We will have then the panel be able to look at those and describe those. Thank you. So what we also have here today, this next session is around the value of advice. So how are you articulating and demonstrating your true alpha to clients and prospects. So we have Vance Barse. He will be monitoring this session, and we hope you enjoy. Thank you.
Hello and welcome to The Value of Advice. I'm Vance Barse, founder of Your Dedicated Fiduciary, and I am truly honored to be here in front of you with Rianka Dorsonville, co-CEO and co-founder of 2050 Wealth Partners, and Ron Bullos, CEO of
LifeWorks Advisors.
Pop quiz already passed. Great. Off to a great start. It was a big lunch. We're here to talk about the alpha of advice, which has become increasingly important in today's ever commoditized wealth management industry. Why is that so important? I'm going to give you a quick little reflection. Prior to becoming a fiduciary financial planner, I spent 10 years of my life traveling the country full-time, consulting financial advisors and wealth management firms, specifically on how to invest for high net worth clients. And during the thousands of hours I spent in that role, I learned way more than I bargained for about the financial services industry. I learned the conflicts of interest that are rife throughout the industry, newsflash. I learned what financial advisors do for their clients, but way more importantly, I learned what so many of them don't do for their clients, which inadvertently will leave them underserved, and the clients don't even know about it. So I became disillusioned, if you will, and decided to create my firm largely to focus on filling in the planning gaps that I saw left behind for certain types of profiles, for example, business owners and executives that have complex planning needs, women in transition who were not given a voice in the planning relationship with who typically was their husband's financial advisor, and lastly, retirees who want to minimize their tax burden as much as possible during and throughout retirement. One of the things that I learned in my former career is that we, unfortunately, are an industry that is the sea of sameness, right? We all do comprehensive wealth management. We all do a great job for our clients. And it's really important when people can invest on this thing, their telephone, to really outline the value of the advice that we bring. And that's what we're here to talk about today. So with that, the first question. Who are your clients? What is your value proposition? And what is your elevator speech? Rianka, let's start with you.
Yes, so thank you so much for the introduction. My name is Rianka Dorsonville, and I'm the co-CEO and co-founder of 2050 Wealth Partners. It was founded in 2020 after the merger of my firm and Lozetta Rainey's Braxton's firm. We specialize in working with first-generation wealth builders as well as first-time business owners, so those who are transitioning from employee to entrepreneurs, and of course the thriving young professional is who we work with. And I guess what makes us different, or what's my elevator pitch, okay? Well, when I'm open to sharing what I do, and actually tell people that I'm a financial planner, because some of the things that happened, like yesterday when I was in my Uber ride, he was like, oh, so what are you here for? I'm like, a conference. Oh, so what do you do? I'm like, should I tell myself solar panels, or like, what's my job today? And so I actually said, I'm a financial planner. He was like, oh, so what's the hot stocks to pick? And, should we invest in cryptocurrency? I'm like, I set myself up for that one.
You're hoping he's not recording in the Uber ride.
I'm hoping he wasn't, and I was just like, you know what, I'm just kidding, I'm a solar panel representative. Do you have your solar panels on your, your home? But no, so my elevator pitch when I am talking to prospects is, I share with them that I use an analogy like a tour guide, right? We are going to enter into a lot of different territory. Just like with travel guides, going to different countries, you're trying different cuisine, different foods, different languages, and it's a lot of different things. It's a lot of noise, and it's just like, okay, I see directions, I see landmarks, but how does all of that, how does that refer to me? Like, what direction am I supposed to take? I see it says turn left, but am I too early to turn left, or am I supposed to turn right? So very similar with financial planners, we are your guide when it comes to personal finances, and everything that touches you from a financial standpoint can, I guess, like go in a good direction or a bad direction, depending on what news or information that you're listening to. And so we share in a roundabout way that, you know, we're guiding you with your finances, and hopefully that we're a life partner with you.
That's it. I'm firing me. I'm hiring her, and here we are. Ron.
All right, tough one to follow. So my name is Ron Bullos. I'm the CEO and co-founder of LifeWorks Advisors. We started LifeWorks as a scratch RIA coming out of Northwestern Mutual, where I spent about a decade there running a team with my co-founder. And we started at 0 assets. But we had a really clear vision when we started LifeWorks, and that we wanted to build a differentiated business model. And so we created a subscription-based financial planning RIA. From there, we've evolved into the second piece, so I'll actually answer real quick who we serve. We have 2 specific target markets, the early retirees, and then what we call the next-gen wealth creators, which would be the under 40-year aged professional, upwardly mobile income that actually doesn't have a lot of assets to invest. Some people call them Henrys or different acronyms. We prefer next-gen wealth creator. And our subscription-based financial planning model, we hear every day, is exactly what they're looking for. They get turned away from large firms because they don't meet certain minimum thresholds, or there's not enough revenue generated from it to give them the services that they want. And so our subscription-based platform does just that.
Can you define for the audience what Henry stands for, please?
What is it? High earning, not rich yet.
Yes.
If you haven't heard that acronym. I prefer next-gen wealth creators because there are also a lot of them for us that are first generation, like business owners, entrepreneurs, contractors, self-employed people that have a lot of planning complexity and a lot of things that they can value, which is, I think, why we're here, right? We frequently hear in that space that they've got, you know, robo accounts, a Coinbase account, a SoFi account, things like this, but then they need somebody to turn to for help making certain decisions, right? So.
Yeah.
Excellent. So you mentioned you were in an Uber, and the Uber driver asked you about hot stock tips.
Yeah.
I've learned that, like at Thanksgiving, whenever a family member starts asking questions about stocks or the economy, I just go, just no, just please, any other day and time.
Right.
The public often thinks that a financial advisor's job is to just manage a portfolio and to pick just the best investments, which of course is at the core of our core competencies. But let me ask, what sets the two of you apart, unique to the advice that you bring to the clients that you serve?
Yeah. So I actually lead with telling clients that we do not anchor our value in something that we can't control, which is the market. And we also share that everyone looks like a genius in the up market, right? It's when the market is doing what it's doing now, where you kind of define yourself and in the sea of sameness, as you were mentioning, differentiate yourself on making sure that the client is educated. So we lead our clients and our client relationships with education. Before we touch any portfolio, when we're managing their investments, we make sure we have a investment planning meeting with them in a presentation that we've curated through the many families that we've helped, and knowing that the questions that they're going to ask and knowing the news and the noise that they're going to see, we put that in front of them first so that when the noise and news starts to happen, they don't call us. Throughout, June 1st now? Between January and June, we haven't had one call about the market and my portfolio or anything, because we've educated our client. We explain to them what it means, like, oh, the market is down 10%. What they actually mean, if you're watching CNBC, is that the S&P 500 is down by 10%. And because that's the most known market, and so it's like, oh, is my portfolio down? No, it's the large cap, remember. So we go back to what we educated them on. That's a large cap. A percentage of your portfolio is based on large cap. So I think what differentiates us is we lead our clients with education. Education is first, period.
The value of advice. Ron?
Yeah, I mean, I would say something similar. Maybe this will be slightly controversial, but we tell clients, look, every financial firm out there, whether it's a large national firm, an independent broker dealer, and even an independent registered investment advisor, regardless of what firm it is, all roads lead back to risk scores and model portfolios. And for most clients, what they're wanting to have addressed is not their model portfolio or how they feel about risk. They're wanting help with things like, I'm setting up my first LLC. Good idea, bad idea. Should I do a solo 401k versus this? So one of the differentiators for us is we won't invest a client's money unless they're paying us for financial planning. Because we have a core belief that if we're not charging a specific fee for the planning and the value that we're creating there, that we're not giving them planning, we're giving them a sales pitch. Right? If as advisors, the only way we get paid is if a client moves assets to your firm, you're already setting yourself, in my opinion, in my team's opinion, behind the 8 ball when it comes to expressing your value you provide to a client.
So that's interesting because we will, at my firm, give clients the option. We go, you can pay for advice and for planning, or we can loop it in. And in almost all cases, the client goes, I don't want to have to write a check. You know who I write checks to? My attorney. And you know what I feel like? Every time I call him or her, I feel like the clock is ticking and I got to rush with everything that I'm saying. And it's just easier. You're going to do the same thing that you would otherwise. And if you don't, we will not be with you. And it's so interesting. By show of hands real quick, who here is on Twitter? Okay, guess what? The fee debate is hot on Twitter on any day that ends in Y, right? And we're not going to make this about that subject, but it's really interesting because in the sort of the old guard, well, the old guard, it was, A shares only, right? And then sort of in the most recent old guard, it was AUM model. And I have seen evidentiarily a lot of advisors implement the fee for planning model that is separate and distinct from, or adjunctive to, said differently, the AUM model, right? But ultimately we give clients the option. And remember back before the TCJA, the 2%, yada, yada, right? And unfortunately, that is no longer with us, but we're not here to talk about tax planning per se. Go ahead.
So Vance, one of the things too is that since we are at a technology conference, make it easy so clients aren't writing checks. Automate their fee to come out of their checking account. While yes, there are some advisors that do monthly. When you see something that comes out monthly, you're mentally trained to say, okay, what am I getting this month, right? And so we opted to do a quarterly fee or quarterly retainer, and so that the client don't necessarily feel like we need to be doing something with them every month, but every quarter we are definitely touching them. Something that makes us different as well is that we have a very cut, clear onboarding process. One of the questions that we ask our clients during the discovery meeting is, 1 year from now, if we look back, what has happened or have to happen in order for you to feel like this relationship has been successful? And not one of them is about investments. It's, I want to feel comfortable when I sleep at night. I want to make sure that my children's college fund is fully funded or we're on track to it. I want to, fully fund my Go to Hell fund and leave corporate America. Sorry, can we say that?
Sure. Absolutely.
You broke the ice.
Some of us have done that in our former careers.
So, we don't know. We have in our mind as financial planners what we think and what we want and what we see clients need, because we can see it. Like, we work with clients every single day. So we see A to Z before they see it. But we have to be with them on the journey or they're going to jump ship. So you can't push clients before they are ready. And so I think asking that question is super important, because what you think that is important to the client or what their expectation is could be something completely different. And a year from now, you can reflect back and say, hey, Amy, I hope it's been a successful year. This is something that you shared with us a year ago. This is the 3 things that you wanted to accomplish. How did we do? How are we doing? What can we do better? And 9 times out of 10, you're going to have a client for life.
Yeah, so, and let me be clear too, just for a point, so I don't have a bunch of people marauder me out in the halls for talking about the fee structure. I think the debate about fee structure is one that Vance is right, it's raging on Twitter between financial advisors, and I think there are studies out there. So Ernst & Young does a global wealth management report once every 2 years consecutively for the last 2 reports. They have been finding that 50% of consumers that have a wealth management advisor or some type of financial advisor are dissatisfied with the fee structure. But the lead investor in my firm runs an AUM only model, an AUM fee structure, right? Him and I have had some raging debates about this, but I think it's less about the fee, and it's back to the title of this session, which is how do you communicate the value of your advice? Our team decided to take what we thought was a natural and transparent and authentic approach, which was to say, here's the dollar value that we're putting on this time, right? And then if you want to hire us to manage your assets, here's the separate fee for that. Now that's worked out really well for us. We have been winning the next gen wealth creators very, very rapidly. It's a very easy sale, right? But it puts the burden on us. We bill monthly, not quarterly. We debit their bank account, or they can pay with their favorite credit card, right? But we tell them that our job is to bring you value and lead these conversations. That's what our responsibility is. So if we're not actively, or I would rather say proactively leading conversations, and we have a planning calendar that covers 8 areas of wealth management, we happily will have a conversation about any of those planning areas at any point in the year. However, we tell the client, you can rest assured that our team is going to be bringing these things to you and leading you through these important conversations on a scheduled cadence throughout the year. That's what we're getting paid for. We think financial planning is a subset of wealth management. It's a subset, not the thing, right? And so one of our topics that we cover is financial planning, but you can't do financial planning in our mind unless you've done values, vision, and goals, unless you have clarity around what really matters to a client. So we've just bifurcated some of this, and we've taken it on as our responsibility to drive these conversations. So how do we articulate the value of that? We set it in front of the client and say, look, these are the things that we're gonna make sure are covered, and not all of them will apply to you. But when life doesn't go according to plan, right? We not only have all of the data that we need to do financial planning, but the other 7 areas of wealth management: estate planning, tax planning, risk management, family strategy, business planning, investment planning. These are all things that we have a cohesive and integrated system to make sure we're ready to adapt and navigate in real time.
Yeah.
And that's what you're paying us a fee for. Now, if somebody wraps this all into a 1% AUM fee, that's okay. I think where we're going is people are going to start pushing into this idea of, well, how much of the value of what you're charging me is actually for the financial planning and those services versus for the asset management, right?
So for our fee, I know this is not a fee conversation, but just dovetail on that, we do charge a retainer plus AUM. So
Sure.
Our retainer starts at a minimum for like $5,500 for individuals, $7,500 for couples, and depending on the complexity, it can scale up. However, in that retainer, $400,000 of your assets, investable assets, are included in it. Anything above that, that's when we start charging AUM.
When did you implement that fee retainer, if you will, in your journey as a financial planner?
I implemented it when I left corporate America and started my own firm in 2015 because I saw it. I was just like, we are missing a lot of the population to work with if we're just working on AUM. If we're only going to work with clients who have $1 million plus, what about everyone else? I'm a first generation wealth builder myself, so what about those who are like me? I couldn't even afford to be a client at this firm, and so what is that saying to me? And there was a lot of college colleagues of mine or peers and colleagues of my husband that was like, hey, we want to work with you, we reading the articles that you're writing, and it's so great, and can we work with you? And I'm saying, I'm sorry, unfortunately, you can't. You know, you have a thriving career. You earn $300,000 plus. You're doing all the right things, but I'm sorry, you don't have $1 million of investable assets. Like, I firmly believe, and our firm firmly believes, that we shouldn't hold hostage the personal financial knowledge to those only who have $1 million plus.
Completely agreed. You know, it's interesting. It took me about 3 years as a financial planner to learn that I was originally in the business of giving away free advice, right? Because this is going back several years, and it was still largely an AUM-based model. And so I would meet with, you know, a potential client, and she or he would say, you know, we really like you. We've had a 27-year relationship with our wirehouse broker. We don't want to move the money. And it took me 3 years to finally go, you know what? I'm gonna set this sort of line in the sand. First 15 minutes are on me, and then I'm retained. And what I found is that all the looky-loos went away because they didn't want to write a check. But then the people who did write a check had skin in the game, and they were committed, and they provided us tax returns, need at least the previous 3 years, ideally 5, all their estate planning documents if they have them. It's shocking to see the number of people who do not even have any estate planning documents whatsoever. It is just, it's mind-boggling to me.
Yeah.
All their insurance policies, their investment account statements, and a household ledger or balance sheet if they have one. And most people don't, but we offer that. And I tell them, look, if it involves a dollar sign, we need to see it, because we need to figure out where the planning gaps are in this estate. And so many of these families have had an estate planner for 2 decades or more. They've had a CPA for 2 or more decades. And they come to us and they go, you know, my largest problem is my tax burden, or I'm really interested in transferring my business or the investment properties that we own to 7 different heirs. Well, very seldom do 7 people who inherit the same business or investment properties or both all want the same things for those assets, right? And that's where a lot of the advanced planning strategies come in. I call it the alphabet soup, right? It's where you leverage you know, different types of trusts to accomplish certain objectives within the context of the planning relationship. And you touched on the services and strategies that you offer. Here's a question. How do you specifically quantify for your clients the tangible value of the advice that you're giving?
Fantastic question. My business coach, Ray Scalafani with ClientWise, challenged us years ago, even before we had started our firm, to start tracking throughout the year all the things that we did for our clients. Updating beneficiaries, updating a will, updating a trust. And that was actually what led us to start creating our own softwares, because we looked around and said, what actually exists out there to quantify that? When we save a client $10,000 in taxes, they forget about that 6 months later, generally, right? Everybody, including myself's memory is very short, as my wife can attest. So we try and, as part of our planning cadence and what's woven into the fabric of how we work with clients, is we're driving those conversations, we're reminding them on a regular basis of what we do. So again, it's not about the fee, it's about the fact that we put the priority on not just creating a financial plan, but having an ongoing relationship where we are leading those conversations, right? And so we have the opportunity throughout the year, because of our structure that way, to be driving those conversations, to be reminding them of that. And most of our clients, as I'm sure some of yours, they get to the spot where they reach out to you proactively and they start engaging more. Now, we don't bill like an attorney specifically for that, because I hate the thought of somebody saying, well, I'm going to spend 30 minutes with LifeWorks because that's what my budget is, right? I don't bill by the 10th of the hour. So I think it really goes back to the frame of how you want to communicate your value. You mentioned the sea of sameness. There's a book out there by Jack Trout called Differentiate or Die. It has nothing to do with financial advising. I would advise every person sitting in this room, if you haven't read it, Google it, it's a fast read. It's called Differentiate or Die. And the question goes something like this: how do you differentiate a service business when everybody says the same thing? So the challenge that I was given by my coach maybe 7 or 8 years ago was, if you lined 100 of you, Ron, up along the wall, and your target prospect walked in and he or she was going to pick one of you as an advisor to hire and manage your money, what would you say that would be different than the other 99? Because you can't say things like, we have a comprehensive planning process. We have, a seamless client onboarding experience. We have great technology.
Don't forget
really
white glove
care,
service. White glove
right?
service.
Yeah, you're tracking with this stuff, right? Everybody says that. Some people might say, well, those are table stakes. I think those are just weak attributes, right? So how do we do it? It's a bit cumbersome. There isn't great technology necessarily for it because every client's different. The one client, I'm envisioning a year and a half ago, we had a client that completely changed who was going to be the guardian of their children because of the planning work we had been doing throughout that first year of our work. What value do you have to that? Right? But we talk with him, we remind him about that because that's in our notes and that's what we're going back to and reflecting on. What we're not doing is we're not saying things like we outperformed the S&P 500. We are saying things like, hey, the minimum rate of return that you need to achieve, Mr. Client, is 5.5%. Your portfolio is down 6 right now. Here's how we're thinking about making adjustments to your financial plan and your saving strategy to potentially make up the gap. We're actually showing them that we're taking actions based on what's going on. Now, our investment structure is liability driven, so we don't use risk scores and model portfolios. We use their financial plan and their future cash flows to align their investment strategy, so it's a little bit unique here as well. But when something changes with their financial plan, how many clients have their investment strategy changed? Or should it be changed, right? So part of what I would say that is helping us communicate the value of the advice is showing the client that if you're doing planning well, if you want to have your wealth managed, that's question number one. If you don't, go buy the S&P 500 and close your eyes and do like Vanguard for 4 basis points, right? But if you want to have your wealth managed and you recognize that there's a lot of other factors that play into the overall return for your family, then we believe this is the right type of planning approach, and it starts with planning, right?
So for us, so we are actually implementing something similar to what your firm is doing because clients do forget
Yes.
all of what you do for them on an annual basis. And trust me, you do a lot for your clients. And so something that we're implementing is kind of like an end of the year letter to clients of just like, hey, and kind of like reflecting on how the year has gone and identifying the different things that we've done for them over the course of the year. But as far as like differentiating yourself and articulating your alpha, it's about life impressions when it comes to clients ultimately, when it comes to financial planning. I'm thinking of a client, Anthony. He was my client since he was 26 and single, and now he just turned 32, have a fiance. One of the things that we do at our firm is every open enrollment season, we send out a questionnaire to our clients and ask different questions. Like, of course, we know if there's some life events that has happened, but are there life events that are going to happen that we don't know about? So questionnaire, and then we review all of our clients' open enrollment and bring suggestions to them. Now it's ultimately up to them if they want to move forward with our recommendations because they know their health better than we do. We can only provide advice to as much information that they give us. And so for this particular client, every company that he worked for, they did not have disability insurance coverage. And so I said, Anthony, you are young. The most important insurance coverage that you have as a young professional is disability insurance coverage. Now, life insurance, while yes, that's very important, a death happens once. If you have a disability can happen over the course, multiple times over the course of your working career. And one disability could wipe out your entire, nest egg that you have built over the course of these past years. And so you need disability insurance coverage. The companies that you're working for, do not provide it. So let's go out and get some individual disability insurance coverage. So happy he did. Fast forward November of this past year, he finally worked at a job that offered group disability insurance coverage. I don't care, Anthony. Yes, you have individual coverage. Let's make sure you get some group disability coverage as well. Fast forward to February, he gives me a call, and he says that he has lymphoma cancer. And I was just so happy that the planning work that we've done for him, because now he's out on disability. He's put a claim in for his group coverage. He put a claim in for his individual coverage, and now since then he got engaged last year, and so she came on as a client with us as well, and so we looked over all her information. Thank goodness we, did open enrollment with her, and so she's out also on disability coverage because she's the caretaker for him, taking him to his appointments every week. And so, those are the life impressions that we have with clients that differentiate us, right? It's just not about investing money or managing money. It's about making our clients' lives much easier. And for life events that we did not even see coming, like cancer or unexpected death, our clients are going to always, always, always be forever grateful for the advice that we give them.
No need to quantify that value. Thank you for sharing that. That's part of our role and responsibility, right? That just comes with time. I completely agree. Clients will often forget about the value that you bring. And when a family is onboarding, we'll go, and typically they onboard a bunch of really expensive